Hi, this is Hermes. Welcome to the knowledge sharing platform of Freedom Freak. Today we have a special guest, Jim, who's from the USA, who's into real estate business for a long time, and also who's an economist. He's going to share all the tips for the new investor in the real estate. Hi, Jim. How are you doing?
I'm doing well. Thanks for having me, Hermes, on the show.
Yeah. Well, well, could you please introduce about yourself? What is your background, education, qualification, and how long you've been in the business?
Sure. So, like you mentioned earlier, I graduated with an economics degree back in 2010 from UCLA. Um, During that time was really tough, as many of you may remember. It's right after the 2008 subprime mortgage crash, and on top of that, 2010 European debt crisis. So it was very difficult for me to find a job. Was jobless for a year, went through hundreds of interviews, got really good at selling myself. Eventually landed a job as an inside sales representative working at LoopNet. Now, for those that don't know what LoopNet is, it's basically commercial real estate, Zillow for commercial real estate. So if you're looking for hotel, motel to buy, office space to lease, industrial space to lease, you can always just go on LoopNet and you have all those inventory available right in front of your computer. So I worked there. I was able to learn the importance of having multiple stream of income just by speaking to real estate investors, lenders, property managers on a daily basis. And eventually, I learned the importance of having additional stream of passive income. And that's when I required my first 2-bedroom, 1-bathroom condo. As soon as I received that additional stream of income, I was pretty hooked, never looked back. Transitioned to become a realtor, and eventually that kind of led me to become a syndicator today.
Okay, now you are a full-time real estate investor, right?
That is correct.
Since you are investing in the USA and it's mostly affected by the US economic status, and recently there was some few banks were collapsing in the USA, and how does that affect the real estate business in the US?
Oh yeah, it's definitely going to trickle. It's definitely going to trickle some effect down to the investors, no matter how you look at it. Right now, what I'll tell you what I'm experiencing, like as a syndicator, when we syndicate these 100 plus unit apartment buildings, loans are beginning to get tighter and tighter. Right, the banks are under the water, so to speak, and so um, when we used to be able to qualify for about 70 to 75% loan to value on a $50 million deal, now it's dropped down to anywhere between 67 to 72. So it's a substantial drop if you look at the price point. And so we have, as a syndicator, as an investor, we have to be very cautious with this type of environment to make sure that we have enough reserves on hand. Just in reserves is basically just emergency money, right? In case something happens. And then we're also making sure that our marketing business plan is catching up. We want to make sure that our occupancy rate stays high. One of my deal right now, we're experiencing an 85% occupancy rate, and it's slowly eating down our reserves because interest rate has rise so much. So that's definitely something to be aware of. Besides that, there's also things like you can purchase insurance, like something called the rate cap, where your interest rate is capped at a certain percentage, and it cannot go above that. So we bought rate caps for our syndication deals where it's capped at 6.12%, and it cannot go anywhere higher than that.
When you say syndication deal, is it your farm deals? Is it include all your farm deals?
Yeah, so absolutely. So when I'm talking about syndication, I'm referring to multifamily syndication. That's what the asset class I'm in. It's syndication is basically a partnership between investors who pool their resources into one single investment. This allows you to invest in multi-million dollars like multifamily properties or any commercial buildings. Syndication eliminate much of that risk while sharing the upside. The property generates an income, then that income will be split amongst all the investors. So it's a win-win situation for the operator and the investors.
Okay. That's a great way to invest. Like, because many people they are scared to get into the real estate business because that's a huge investment they have to make in the initial things. But when you're sharing with many people, when you're collecting pool of capital together to purchase the real estate property. I think it's a great thing to do. And when you buy any property, what will be more focused on, like a regular cash flow or the future price of the land or the current price of the land? What will you be more focused? Will you be focused on the cash flow or?
Good question. So it just depends. Every investor is different, right? For me, I'm in this business for the long haul. I'm pretty sure you've heard of the phrase, real estate is a get rich slow scheme, slow game, right?
Yeah.
You can build wealth, you can get rich, you can get there, but it takes a long time. So I already, since the beginning, I knew this, and I thought that, everybody, I'll tell you this from my perspective. Most people, when they get into this business, they're looking for more cash flow. They're looking to add more cash flow, more passive income, and eventually be able to replace their salary with their passive income, right? So they're financially free, right? That's a goal. But in my reality, what I'm aiming for me personally is I'm looking to hold it long haul, like to buy and hold for as long as I can.
Mm-hmm.
And let it appreciate over time, because the upside of that is going to generate more return investment than the cash flow you're getting. And that, I think that's what most people don't see it, or if they don't study enough, they won't understand that. And I'll give you an example of what I mean by that. Like in California, right? People always say, don't invest here. It's horrible. It's tenant friendly state. You don't want to deal with the politics, eviction moratorium, and so forth. And the price is too high. Well, guess what? There's many millionaires and billionaires that bought houses out here, and they just hold it. Even though it doesn't cash flow, their equity in multiple, holding it for 5 to 10 years down the road, they're able to 3x to 10x their money, just because of how robust this market is. Does that make sense?
Yeah. But the cash flow that give them the regular income, but when they are focusing on the long-term things, I have, but I'm not sure. I'm not from the economical field, but I have heard some kind of a conspiracy theories, like when you're investing in real estate, when you're seeing in the long-term prices, actually the prices doesn't go up, but the value of the dollars, whatever the currency you are calculating the value of the real estate property, the currency values goes down. So because of that, you feel like your real estate property value is appreciated, but actually property value is not being appreciated. It just go along with the inflation. So what will be your answer for that?
Yeah, you're absolutely right. So they say that real estate is the best hedge against inflation, and that's exactly what you just said, right?
Yeah.
No matter what, as long as we see like an inflation, our real estate is going to go up along with inflation. But I'm talking about in terms of the upside in like robust markets like California, right? Even though people are moving out of here, the price has stayed stagnant. It hasn't gone down much, which means that there's not it's a demand and supply issue when you talk about economics, right?
Yeah.
There's not like a bunch of land out here in LA. If you actually come here and visit, as you're going down on the airplane, you see every single little corner of this lot is built, completely built out. So there's not enough. There's no supply. Even though people are moving out, prices have not gone down because we don't have enough supply out here. And there's still so much demand for people to want to move out here for the weather, for the entertainment, for Hollywood, for all kinds of reasons, right? So you kind of have to look at that as a matrix, to kind of figure out, okay, is this market worth investing? And yeah, sure, cash flow is great. Cash flow, if you want to invest for cash flow, you should definitely look out of state. California, you're not going to cash flow much at all.
Okay.
That's why I choose areas like Florida, Texas, Georgia, places like that. That's going to cash flow, and you're also going to get some appreciation. But to answer your question earlier, the hedge against inflation in California, you're definitely going to get that hedge, but you're going to get much greater return on top of that hedge. Okay. If that makes any sense, if you're able to hold it
Mhm. So you are saying that on top of the inflation, you'll be able to make profit, because if you're just matching up with the inflation, that's not a gain. That's just you are maintaining your purchasing power, but only if you're going on top of it. But that's another thing is like, if you're getting a cash flow at least like 1% per month, like if you're investing for $30,000, and if you're able to get like around $1,000 per month, then it's like you can pay off your mortgage with a tenant price. So with you can with an collateralizing the existing property, you can buy a new property and you can continue the spiral, right? Will that work in the USA, or how does it work?
Yes, absolutely. And that's how everybody starts off, right? That's how I started off, right? By building yourself up little by little, right? Start with what you have. And if you don't have enough down payment, go raise that capital from your family and friends, right? As long as you have a deal, you know it's going to perform. All you got to do is put in some work and you can generate some return, then do it, you know? And that's how usually people start, by starting slow, by building that cash flow, you know, little by little, until they reach to a point where they're like, okay, I have enough cash flow now. I want to build more wealth. I want to increase my net worth,
Mm.
right? So that's a different strategy then, right?
Yeah.
Versus continue to add more cash flow.
Mm. Okay. Being a nurse, most of my viewers and friends are from the nursing field, and many of them work in the USA as well. And if they are trying to buy any properties in the USA, not in the point of investing, but in point of living over there for a longer period, what would you suggest them to look into? Any kind of advice for what would be advice for them?
If they're starting off, just like we mentioned, if their strategy is to get as much cash flow as possible,
Mm-hmm.
then I would highly recommend looking in states that's growing, that has growing population, that has growing job growth. So population growth, job growth. Look for states where it's landlord friendly. So avoid states like, you know, New York and California, where you can evict a tenant right away. Look for Sunbelt states.
Mm.
Invest in the states where there's sun. Like if you Google Sun Belt, BELT, you'll be able to see all the states where, you know, it's sunshine states, and that's where usually people like to move to, right?
Yeah,
You
okay.
know, like, you know, if the people from California, when they choose a different alternative state, they look at Arizona and Florida and Texas. Those are the three alternative sunshine
Mhm.
states, right? It's more affordable. Those are the couple things I can think of on top of my head. But yeah,
And
so definitely look into that, do some research.
okay. Actually, I was asking for the people who are just buying the house for them to live in, not
Oh,
for
okay. I'm sorry.
like uh, mostly nurses when they settle in the USA, instead of paying the rent every month, if they want to
Mhm.
buy the house, what kind of things they have to look for? Like if if you met any you if you're giving advice to any of your clients who are trying to purchase a land real estate property from you or any other real estate broker, what what are the features they have to look for, and what are the government benefit they can get in the US?
Yeah, so this is for owner occupy, right? I heard that
Yeah,
wrong. I heard rental.
yeah.
Okay, owner occupy is completely different. It depends. I mean, just like anywhere else, right? Living anywhere else, you got to look at the school districts. You look
Mhm.
for the neighborhood, right? If it's safe, if it's high crime rate, and so forth. Um, you look at the potential for growth too, right? Because at the end of the day, you want to make sure that you're in a neighborhood where it's people are taking care of their properties, right? People are not just doing what they want to do with the community. And typically, I don't know if you guys have this in United Kingdom, but we have something called the HOA, the homeowners association. And they're the people, basically you have to pay the monthly fee to live there, but they maintain the community, you know, the mowing the lawns, cutting down the trees, maintaining the
Mhm.
pool, the clubhouse, and stuff like that. So If you look for areas like that, then you can definitely bet that these neighborhoods are being under, they're following the regulation and so forth. So you want to look for these neighborhoods so that you can live there comfortably, but when it's time to move or sell, it's also really easy to sell, right? Because it's very desirable. Look for amenities, right? Any amenities, close amenities, highways, subways, anything like that, metro, that easy access, convenient located. Those are the couple key things I would say. And then for land, you just have to look at markets where there's plenty of land. So like in California, it's really relatively expensive to find a land out here to be able to build. But if you go in Texas, there's plenty of lands out there. You can get lands like 1 acre, 2 acres for really cheap, and you can build a really big house out there, under $1 million. So these things are you just have to. It depends on your strategy. It depends on whether or not you want to look for a house that's already built, whether or you're looking for to customize your house.
Okay, and being grown up in India, it's very common in India that people buy the property with full cash without taking any loan from the bank. But living here in the UK, here it's very common that people always go for the mortgage. Even though they have more than hundreds of thousands in their bank account, even if they have more money, sometimes they may buy more properties, but they'll never buy the whole property with a full payment. They always go for the mortgage, because here always they understand the benefit of buying the property with a mortgage. So what would you suggest if any first time buyers the house, would they have to buy the house if they have enough capital? Should they go with a full cash payment, or should they look for the mortgage?
It just depends on the strategy again, because everyone's different, right? And I'll tell you a little bit about myself and how I approached it. I actually come from the same background as Indians. Right?
Yeah.
As a Taiwanese, when I was born and raised in Taiwan with a saver's mentality, in our culture, in Asian culture, as you know, we've been taught if you can't pay for something in cash, you can't afford it. In our mind, debt is slavery and cash is freedom. Which, this philosophy runs counter to heavy debt and consumerism culture in America. So that was a mindset that I had to kind of overcome. And the way how I go about that is, after acquiring my first 2-bedroom, 1-bathroom condo, I realized there's so much I don't know about real estate. So I picked up the Purple Bible, Rich Dad Poor Dad by Robert Kiyosaki. I'm pretty sure you guys heard of it.
Yeah.
Read that book, and he talks nothing about using debt. Why would you not use debt? Debt is the ultimate, the best tool you can use. It gives you, it amplifies your returns, and it gives you tax benefit. Why would you not ever want to do that? And as I got into syndication, you kind of have to use other people's money, and that's exactly what leverage is, right? When you use a loan to purchase a house, you're using the bank's money to help you make money, if you think about it from an investor's standpoint. But if you're just looking to buy a house, like you mentioned earlier, for you to live in it, and you want to live comfortable life, I'm not opposed to just buying the house all cash offer, because that's how my parents has raised me to do. That's how I did my first deal, to buy that 2-bedroom, 1-bathroom condo. It was a short sale. I purchased with all cash, with all the money I've been saved. I saved my whole entire life. But there's always better way to do things. And by figuring out, you just have to take some time to educate yourself. It just takes a little bit of financial education. If you pick up that Rich Dad Poor Dad book, you'll learn so much, and that's helped me shift my mindset a little bit to understand the idea of there's actually good debt and bad debt, right?
Yeah.
Bad debt is you got to pay them off. Credit card bills, those debt that's going to eat up your money, your bank account, right? You're paying 20% interest rate. Good debt is where you use this debt to leverage to help you make more money, right?
Yeah.
Syndication, using banks' money, using other people's money, to help you generate more return investment for everybody, not just for the people you're borrowing from, but for yourself too.
Yeah,
Right.
true. And when people buying for either for real estate purpose, investing purpose, or for living purpose, what would be the ideal purchase? Will it be the flat or the separate houses? Which will give you more returns, houses or flat?
I would say houses. Again, at the end of the day, you have to always think like, okay, if I buy this property, right, how easy is it going to be for me to sell it? Ask yourself that question, right?
Yeah.
Is there going to be a demand for it? Is there going to be a supply for it? Is everybody going to fight over this property? Right? Just ask all those questions, and then you'll be able to just eventually come up with the answers. Okay, I think this is a good area to buy. This is a good house to buy. Right?
Okay. And when they are buying a flat, what are the hurdles they have to go through when they're selling the properties?
When you say flat, can you elaborate a little bit on that? I'm not too sure. What do you mean? Oh, you mean like an apartment, like a condo?
Yeah. Apartment. Yeah.
Okay.
Which gives you more returns, like apartments or the individual houses?
Oh, you're talking about when investing.
Yeah. Investing.
Oh, okay. I can tell you apartment investing is a lot more scalable.
Okay.
It's a lot more scalable. So I'll give you an example of that if you like. So you can build a healthy real estate portfolio by buying a single family resident, like the regular house, right? You're talking about, and continue to acquire until you run out of time and money. With multifamily, you can scale into millions of dollars of wealth if you just focus on appreciation alone. Multifamily builds wealth much faster. Not only that, but you're also able to attract more sophisticated people to work with you, real estate agent, lender, property managers, and so forth. So when you buy 100+ units versus one single family residence, it's just so much easier to scale. Not only can you attract higher caliber people, like I mentioned, but you're also able to put, let's say, hire an on-site manager to live on site, right? To look over your maintenance throughout the whole units. Versus if you buy 5 different houses, you have to have five different vendors or property managers running around looking to collect rent and doing maintenance at 5 different locations, right? And on top of that, if you have 100+ units, you have like 3-4 roofs, right, throughout the whole complex. Whereas if you have 100 doors, 100 houses, you have 100 different roofs that you have to repair. So that's what I mean by the scalability. It's a lot easier to scale.
So for the investor point of view, you said apartment is the best choice, but when it comes to the tenant points of view, like not the tenants, like for the people who want to buy the house to live in, and for the future generation as well. So in that case, what will be the good choice? I know it's
so again, it just depends on your own personal preference, right? I've seen people where they buy apartments and they do something called a house hack. Okay. And house hack is where you live in one unit and then you basically, you rent out the other units. So you can buy a multifamily 4-plex, right? 4 units, you live in one unit and then rent out the other 3 units. And then you also do the maintenance on site. So you're able to cut costs that way. But the problem with that is you're living with your tenants. So your tenant kind of knows you're the landlord and so forth. So that it just depends, right? How much privacy you want. But some people are willing to do that to cut costs, to save money. It's smart, but it just depends whether or not you want to put yourself through that. Or your family or your wife or your kids, it just depends.
True. And when you are doing in the real estate business, and more, would you prefer buy and selling the real estate property or buy and renting out the real estate properties?
Again, just depends on the situation. I mentioned earlier, my strategy is buy and hold. I try not to sell unless I really have to, right? Because if you've been along in this industry long enough and you talk to enough real estate investors, most people, they'll tell you what's one thing they'll regret is selling a property when they didn't have to. Because I hear stories where like, yeah, I sold this property back in 2020 for, 20 million and I bought it for 10 million. Yeah, that's great. You made $10 million on it. But guess what? In 2023, that property just sold again for 26 million, 28 million. so
Yeah.
so I hear a lot of stories like that, as you go out and network with people. So that's one thing that I've heard over and over, and that's one mistake that I kind of and I'm learning from other people before I make it make it myself.
That in the crypto market and the stock exchange market, always people say bull and bear cycles and bubble and bust. So how does it work in the real estate? Is there any kind of cycles? So people
Oh
should be,
yeah. Oh yeah. Oh yeah.
they have to get in particular time and they have to get rid of in particular time, or should they have to hold for their life?
Yeah, yeah. So you got good questions over here. So there's so just like you said, in real estate and versus stocks, crypto, more volatile market, there's a cycle, right? In
Yeah.
real estate market, I can tell you there's four cycles. There's the recovery, expansion, hyper supply, and recession,
Okay.
right? And those are the cycles that we usually go through. Recovery is where everything is doing well. It's the seller's market, right? There's plenty of opportunities. Sellers are able to sell for high price, and that's basically what we went through not too long ago. And sellers market, which is the expansion, is the next phase, which is the sellers market. When this is when, like, I would say 2020, what was 2022? Yeah, 2022, when it was like the peak of it was, I think it was during April. And I'm talking about here in the
Yeah.
United States. I'm not sure about India and United Kingdom, but
I think United States affect almost the whole world since it is the largest economy in the world.
right. So the peak of the expansion during the peak of the seller market was last year, April, right? And then the interest rate kind of just turned everything upside down.
Yeah.
So that's when you hit to the next stage, the next cycle, which is the buyer's market. It transitions from seller's market to buyer's market, and that's when there's hyper supply, right? Because once you increase the interest rate, now there's more and more housing available, right? There's more supply now,
Mm.
and which that's when it shifts. And then the final cycle is recession, and we're still in the buyer's market, and that's what we're going through right now. That's the cycle we're going through right now,
Mm.
right? So those are the four cycles that
So
most people should be.
basically, when the government doing the quantitative easing, the prices goes up, and the quantitative
Mhm.
tightening with rising the interest rate, the prices goes down. So
Yeah,
with the real estate business, you need to keep a close eye on it. Okay.
absolutely.
Okay.
Hmm. Yeah. So
And
after this recession, we're gonna go through the whole cycle and go back to seller's market again, which is the recovery phase that I mentioned earlier.
yeah. So that happens mostly when the Fed decided to reduce the interest rate. Am I right?
Hmm.
So far they've been since even after the banks are failing, they are still increasing the interest rate. And
Yeah,
so
because the
only if
inflation is
they,
is kind of going crazy.
yeah. So only if they reverse the interest rate, either zero or negative in that category, then the real estate boom started to happen. Am I right?
Yeah, that's the recovery phase. Yeah.
Yeah.
Remember, there's four phases: recovery, and then expansion, hyper supply, recession.
Okay. And
Mhm.
thank you so much for giving all the tips. And the final question, and you said you just completed your degree after the 2008 financial crisis. Can we talk a little bit about 2008 financial crisis? What
Yeah.
happened? What was the reason for the financial crisis? What was the impact happen on the people's life?
Well, it will never happen to people like you and I, because they're the people who over leverage, right? Who over borrowed, and that's exactly what happened. In America, I don't know in other country, but in America, people were able to borrow 100% LTV. So
Mm,
meaning they didn't have to put any money down on to buy a house, and everybody can qualify for it. And if you think about that, of course it's going to crash, right? Because eventually these people that borrow 100% of the money from the bank to buy properties, they don't have the income to support it. They can't pay their debt. and when they don't pay the debt, well, what happens? It's the house is going to be foreclosed upon. And that's exactly what happened during the 2008 subprime mortgage crash. There's just too many people that was over leveraged, and it taught us a lesson, which is good, because now it takes a process. It takes kind of a lot of tedious work to go through to just get to qualify for a loan now. They verify everything, they check your pay stubs, they make sure your tax return on it's on point and everything. They scrutinize everything now, for you to be able to qualify for a loan. So it's a great thing. And to talk a little bit about more on the real estate side, back in 2008, during the subprime mortgage crash, we had 4% foreclosure on single family resident, the houses that you're talking about, right? 4%. Multifamily, there was only 0.4% that went into foreclose. And the reason why these 100 plus unit apartment building foreclosed default at such a low rate, why the risk is so low, is because lenders don't want to take over a project like this. They don't know how to operate it. They don't know how to run this business. They'll do whatever it takes to work with the operator to make sure that that the operator is able to still be able to pay up down the road. Like, it's just they'll do everything that they can to work. It's a partnership, right? Essentially, in syndication, is a partnership between operator with the lenders, with the agents, with the investors. It's a partnership. It's a team collected effort. Without one piece of the puzzle, the whole thing can crash, right? So lenders, they're not going to foreclose upon you if you can't make your payment for a month, 2 months. They'll do everything to work with you. But if you're talking about single family residence, that's completely different, right? If you can't pay for it, well, I'm just going to foreclose upon you. Not much you can do about that.
Okay. You said something about multifamily properties. What is the difference between the other properties? How does it work?
Multifamily is the same thing as apartment. What you're talking about, the flats.
Okay. Single houses are. Yeah. Okay.
Yeah, when I say 100 plus units, that means 100 doors.
I got it. Thank you so much, Jim, for joining us today. I hope the video is very useful for the viewers, and thank you for joining. And
thanks for having me.
If anyone wants to contact you in the USA for the real estate business, how could they contact you? What is the best way to contact?
Yeah, they can visit my website, formosainvesting.com. I wrote a short 20-page ebook. It talks about all the mistakes I've made as a real estate investor, so you don't have to make them. Besides that, they can connect me on any social media links, Facebook, Instagram, LinkedIn at Formosa Investing. Okay. Thank you all. And Jim's contact details will be in the description. Thank you for watching. Thank you.